A code editor just hit $3 billion in annualized revenue, and the company reportedly holding a 30-day option to buy it for $60 billion makes rockets, not developer tools. Cursor, built by the startup AnySphere, has spent roughly 2 years turning a fork of Microsoft's VS Code into the dominant AI-native coding environment. The pitch was simple from the start. Replace autocomplete with an agent that understands your entire repository, edits across files, and runs the commands you would have typed yourself. That pitch has aged remarkably well. According to Bloomberg's reporting, Cursor now sits at a $3 billion annualized revenue rate. The company was reported to have crossed $1 billion in ARR only earlier this year. Tripling in months, not years, is not a normal SaaS trajectory. More telling than the headline number is the customer composition. Cursor reportedly has more than 3,000 customers paying at least $100,000 annually. That is not a tool spreading purely through individual hobbyists. That is enterprise procurement, signed off by engineering leaders who have actively replaced or augmented their existing IDE and assistant stack. Multiply 3,000 customers by a $100,000 floor, and you already have $300 million in committed annual contract value just from that segment. The rest of the $3 billion figure comes from larger enterprise deals at the top, individual paid subscriptions at the bottom, and team pricing in the middle. Then comes the strange part. Bloomberg reports SpaceX holds an option to acquire Cursor for $60 billion, exercisable within 30 days after an expected June 12th IPO. The reporting is not entirely clear on whose IPO the clock starts on, and that ambiguity matters more than it looks. $60 billion against $3 billion in annualized revenue works out to a 20 times revenue multiple. For private SaaS, that is high, but not entirely unheard of for the fastest growers during a platform shift. For a publicly disclosed acquisition option written in advance, it is nearly unprecedented. Public SaaS comparables trade at roughly 4 to 10 times forward revenue today. The premium implied in this option is being paid not for current revenue, but for growth that has not yet happened. Whoever wrote this option is betting Cursor's ARR keeps compounding faster than market multiples can normalize. Now the genuinely odd part. SpaceX, a rocket and satellite company, a buyer with no obvious strategic rationale for owning a developer productivity tool. Starlink does not need a code editor, and Falcon 9 does not ship with autocomplete. Possibilities worth considering, none of them confirmed by the reporting. 1. This is XAI by proxy, with SpaceX's balance sheet capacity standing in for a broader, Musk-aligned AI portfolio. 2. It is a defensive holding meant to keep a strategic asset out of the hands of Microsoft or OpenAI. 3. The reporting is incomplete and the actual structure is more nuanced than a clean acquisition. The 30-day window is the detail that most resembles a real deal term rather than informal interest. Options that short do not usually exist for vague strategic curiosity. They exist when someone has already done diligence and wants the right to act before the public market closes the price gap. What we do not know is significant and worth stating plainly rather than papering over. We do not know who on the SpaceX side actually negotiated this. We do not know whether Cursor's board has formally accepted the structure or merely entertained it. We do not know how AnySphere's existing investors view a SpaceX outcome versus an independent path forward. We also do not know exactly what triggers the option: a specific share price, a liquidity event, a change of control. Each of those would change how seriously to read the 60 billion number, because options written against unlikely conditions are mathematically much cheaper than they look on paper. The reference to a June 12th IPO sits inside a broader unfreezing of the tech IPO window. After roughly 3 years of dormancy, a handful of AI-adjacent companies have begun testing public markets. An IPO at this stage of Cursor's growth would be unusually early, which is part of why the surrounding structure deserves scrutiny rather than acceptance. For competitors, the implications are sharper than the headline number suggests. GitHub Copilot now has a benchmark it cannot ignore. Microsoft has spent years owning the default AI coding experience by virtue of being bundled into VS Code, and Cursor has eaten that lead by forking the very editor Microsoft maintains. Cognition, Replit, Codium, and Anthropic's own Claude Code now operate in a market where the apparent leader is valued at $60 billion and growing into the multiple. That changes funding conversations, hiring conversations, and the willingness of enterprise buyers to commit to anyone smaller. For any Sphere employees, the math is uncomfortable in a good way. A $60 billion option strike implies enormous secondary value even before any deal closes. Retention is suddenly the company's hardest problem because every senior engineer is now sitting on potentially liquid wealth at any future tender. For the rest of the AI tooling market, the signal is that revenue multiples have decoupled from the rest of software. A traditional SaaS company growing at Cursor's rate would trade at perhaps 15 times. The 20 times mark, applied via an option, not a closed deal, is the market pricing and optionality on a category that did not exist 3 years ago. The skeptical read is that this is the top. 20 times revenue options, written by unusual buyers, tend to mark the peak of an enthusiasm cycle rather than the floor. If Cursor's growth slows, even slightly before the option window opens, the entire structure repricing in public would be ugly. The less skeptical read is that AI-native developer tools genuinely are eating the IDE market, that Cursor's enterprise penetration is real and sticky, and that $60 billion will look conservative within 2 years. Both reads are defensible. Neither is yet provable from public data. What to watch over the next 60 days? First, whether the June 12th date actually holds, and whether the IPO referenced is Cursor's, SpaceX's, or some other entity entirely. The Bloomberg phrasing leaves room for all 3 readings, and the answer materially changes the story. Second, watch enterprise churn. The 3,000 customers at $100,000 annually is the load-bearing number in this entire story. If a meaningful slice of those seats came in during recent frontier model upgrade cycles, they could move just as quickly when the next model lands somewhere else. Third, watch what SpaceX or whichever entity is actually behind this option does in the developer tooling space more broadly. A single $60 billion option does not constitute a strategy. A pattern of related investments around it would. The story of Cursor is no longer about whether AI can write code. That question is settled. The story now is whether a tool built on top of someone else's editor, against someone else's foundation models, can hold a $60 billion valuation when both the editor and the models underneath it are commodities the company does not actually own.